All right, let's look at question number 3, where we are using expense, purchases, sales, and drawings account. So this drawing account is something new. So Alex owns a business selling footwear. The financial business's opening statement of financial position is as follows. So these are the balances that we have in our equipment, bank, cash, and capital. So these four accounts we need to open with the starting balance. So I've actually written out all the account names that we need to put in. So these are actually hints on how we're supposed to do it. So if you're not really sure, you can use this video to actually help you to check your answers. Dun, 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 dun. Record this information in suitable ledgers. Whenever you see ledger, the word ledger means that in a ledger book. Inside the ledger book contains all your T accounts. Okay, so now we just need to open up all our T accounts and start doing. So first and foremost, we are going to open the four accounts that has balances. So I'm just going to open my accounts here. 1, 2, 3, 4. Okay, once it is done, I'll just write the name of the accounts. First one will be equipment, 6,200. Since it's an asset, it has a balance on the debit side. April 1st, balance, okay, this is the next account called bank account, also has a balance on the debit side, 8,400 on the first day. This is the date that I'm referring to. First, the next one will be cash account, $300, balance brought down. The date will be 2018, April 1st. Next one will be a capital account, 2018, special account on the credit side, balance brought down. Okay, let's start. Purchase goods for resale on credit. So you see these words here. Purchase goods for resale refers to purchases account. On credit. So when we buy something from people, we eventually need to pay them back. So it goes into something called a trade payable. One day I'm going to pay them back. So that's how you differentiate whether it goes to your purchases, goes to your trade receivable, or it goes to your trade payable. You have to think, am I going to pay the person, or am I going to receive money from the person based on the transaction that happened? So if we are purchasing goods for resale, one day we have to pay them back, which is why we have to record them in trade payables. So we have to record 3,600 on the debit side of purchases. Where did we buy, or how did we buy this is through trade payables. The date would be 2018, April. The April 4th. And then in the trade payable account, I have to write it on the credit side because it is a form of liability. One day we have to pay them back. On the same date, we're going to write purchases. 3,600. This is what we call one set of double entry. Next, we need to open another account. Because the next one says cash sales. Cash sales means that a sales that is done using cash. So if you remember, I always tell you that sales is 100% always on the credit side. So I'm just going to write it there, 2018, April 5th. The details would be cash, because we got cash from selling things. And then when we go to our cash account, we receive 1,230 from selling things, which is the sales account, April 5th. Next, Alex withdrew check. Okay, so you can see here, withdrew a check, meaning that you take out from your bank. Took out from the bank, because check refers to bank. For what purpose? For private use. For private use means that it has to go into an account called drawings. Drawings account is an account whereby when the owner takes the money for his own use, drawings account, you have to record it inside. It's called a special account, always on the debit side, like your capital account, always on the credit side. So drawings 240, you have to write bank right here, and then we have to write April 8, 2018. And in our bank account, we will have to write on the credit side because the money went out. Where did it go? To the drawings account on April 2018, April 8. Sold goods on credit. Now you see, we sell goods on credit. So whenever we sell things, are we going to receive money or are we going to pay money? So if you remember that clearly, we are going to receive money. That's why we need to open a trade receivable account. Receivables. So when we open our trade receivables account and our sales account, okay, if you're not really sure where do I put the debit or credit, just think of your sales account. It is always on the credit side. So let's just put the amount that we know on the credit side for sales, 470. Where does it go? Trade receivable, which is on the 9th. So since we credited that side, this side 100%, it is on the debit side. Sales 470. Okay, now purchase goods for resale paid by check. Same thing here. We go to our purchases account, which is 99% on the debit side. We immediately need to put 1020 inside here as our bank. Our money went out of our bank account. 1020. Sorry, 510. Not that. 510 goes out of your bank account as well because you bought stuff. On the 11th, paid wages in cash. So now we need to use cash. The money went out because we paid money to what account? Wages account on the April 13th. So we don't have a wages account. We're going to open another account called the wages account. So in our wages account, 620 on the debit side because we credited this side on the cash account. So here we need to write the details, cash 2018, April 13th. Done. Number 18, purchase some additional equipment. So we bought more equipment and we paid by check, means that the money came out of the bank. So money goes out of your bank account, 1020 goes to your equipment on the April 18th, and then your equipment account will have more equipment. Where did it come from? From using the bank money to buy it, 1020. All right, nice. Then let's go to the next one. Alex withdrew cash. Now you took out money for your private use. Instead of taking it from the bank account, you took it from the cash account, which is $90 comes out, goes to your drawings, because drawings is a special account that's always on the debit side. So on the 19th, drawing 19th, we go cash account, $90. Sales of 720 were paid into the bank. So basically, the person that you sold to immediately paid the money to your bank account. So for example, let's say you sell something online and then they just bank it to you. So it will be always on the credit side of sales account, right? The money come from the bank, or money goes to the bank account and then goes to your bank account, write it on the debit side, sales, 720. Paid wages in cash, so we do that the same thing again, 580. Wages are like monthly or weekly salaries, but we only pay them on a part-time basis. So we don't really pay them every single year. We maybe use them for a few months and that's it. That's why we call it wages. And we are done. That's it. That's all you need to do.